Well, Sam Zell, Equity Group investment founder, told us in a program earlier that when you talk about commercial real estate, it becomes less attractive when supply's increased. And right now, we're building 387,000 new multifamily units in this country. That means a lot of people are employed, a lot of things are being bought. So I don't think oversupply, which reduces demand, is bad, but it's bad for real estate owners. Let's talk to one. Tom Barrack, Colony NorthStar CEO, still with us. What's your view?
My view is I've learned over the years, whatever Sam says, I go with.
I'm sure he loves to hear that. But I mean,
he's hardly wrong.
But do you feel like in the real estate world, we're in areas where there's bubbles approaching, or is there still value to be made?
Well, look, it's a bubble in capital, right? It's not a bubble as we've experienced them in the past, supply and demand. And Sam obviously is right. If you look at multifamily, rentership has increased from 61% to 69% as home ownership has decreased from 69 to 61. And we had a single-family rental business. Starwood had a single-family rental business. Blackstone had a single-family rental business that have proved to be very viable operating entities. On the commercial side, on the retail side, on the industrial side, supply hasn't been exorbitant as it has in the past, but the supply of money, right? Central banks intervening and the liquidity flood and the attractiveness of a postage stamp of safety or capital preservation has been the private markets as well as the public markets for real estate. So cap rates have come way in, and it feels bubblicious, right? When you look historically at those spreads. But if you look at them against the 10-year, we're where we've always been. So I think the answer is that real estate entrepreneurs and providers, or public companies such as ourselves, finding these silos of value-added increase in this changing economy. So you have physical obsolescence in the system. You have financial obsolescence in the system. You have functional obsolescence of stuff, right? Bloomberg was ahead of this type of office building was earth-breaking, right? There was never anything built like this before.
Right.
But if you look now at how tech companies are housing themselves, or WeWork, to have WeWork, which doesn't own a brick, to have the same market cap or greater as Boston Properties, is kind of where we're going. It's going to the next.
So what is that silo opportunity? I mean, you've bulked way up when you got together with NorthStar. You're a much bigger company than you've got a lot more resources. Where do you find those opportunities? Where are things underpriced right now?
So, you know, underpricing is very difficult. There's hardly anything that's underpriced. It's value-added utilization in these silos. So if you took industrial, if you took infrastructure, if you took the digital divide and supply of what that is going forward, if you took hospitality and forum, you know, retail, of course, is being hammered. My garage looks like an Amazon.com logistical center instead of going to Walmart or Sears. So that recycling of what happens in the retail world is obviously a big issue, but it's not really underpriced either. Housing, the same thing. Right. So I don't think there's anything cheap. I think that real estate entrepreneurs are going to have to do what they did 50 years ago, is understand your tenant. So it's no longer the tenant being a stable IBM or Xerox in a 15-year lease.
Right.
It's Apple